Well, good morning. Yeah, we got war. We got war. So we're talking about, see if I can get this back. There we go. Good morning, everybody. How are you? Welcome to TriggerCharts pre-market rundown for Friday, January 3rd, 2020. It's going to be a pretty exciting day here. We got the war room lights on behind us. You can see that we switched it all to red because futures are down. You got the Dow Jones Industrial Average Futures down about 250 so far this morning. And the SPOO's down 31. The NASDAQ Q's down 100. Yet gold is moving a little bit higher. See 20 points up, breaking up to, I think, about a 9-month high over there, somewhere around that. And we're seeing that crude oil is moving on the Middle East tensions as well. Before we get any further, a couple things to mention here. We'll discuss your symbols. Put your symbols in the chat. Ask any questions you want. We'll get to that throughout the discussion. Also, everything that we talk about here today is, in fact, for educational purposes only. It is an idea about how to utilize technical analysis, how to use, in particular, the TriggerCharts tools, which are right now not only the #1 highest rated in the TradeStation App Store, but the #1 overall most popular. So thank you very much for that. Anyone who signs up for a new subscription to the TriggerCharts Commander Series will get not only the full suite of indicators, but you'll get a 4-hour course, a coaching course of sorts where we have it online, virtually available for whenever you want. You can play it back as many times as you want. 4 hours of training on all sorts of areas on technical analysis. So make sure that if you are thinking about it, if you're in trial mode, you subscribe. And once you do, send us an email to support@triggercharts.com, and we'll get you started on that course. So, yep, we see a lot of people. Wow, a lot of people in the room today. I guess people are either very interested in what's going on, or maybe it's back to business for the new year. A lot of people want to actually do some trading and do their, make up for maybe some things that they didn't do last year. Oftentimes, the new year is a great time to look at what you've done, to make some plans, and to make sure that you're on track. We're going to talk about that a little bit as well today. But let's get into some of the discussion here as the markets are ticking. As I mentioned before, we did see that the markets are off of their low, 6 a.m. low, about down 350 points or so on the Dow Jones futures. They are starting to lift a little bit, as we'd expect, into the open in about 28 minutes from now. We'll see how that plays out after the U.S. had a strike in Iraq on an Iranian general, and actually 2 major heads of state or of the army were eliminated. And I'm sure there'll be a lot of spin going on today on, well, it was a good thing, but yet at the same time, a little bit different than we've seen in the past, where in the past we've done, we've taken out some of the people in not necessarily the areas of, country-based or sovereigns, more splinter groups. We've done a few otherwise that we've been working on when we're in actual war. But one of the things that really is shocking markets right now is the markets really felt for a long time there was nothing to worry about. In fact, we had this really great end of 2019, a major rally with technology and biotech growth stocks leading the way. Pretty much everything lifted up. December was a great month for almost every sector. We saw from commodities to equities to pretty much bonds as well, and everywhere in between, doing really well in the last quarter of the year, and in particular in December. There was really nowhere that you can go that you didn't make money. But the problem is that we're starting to see a little bit of froth in the markets. Apple is now hitting $300, a target that was out of the range at the beginning of the year. The largest company by market cap is really dragging a lot of things higher right now. And tech continues to rally. Tech is seeing some very significant upside right now. Well, we have the same themes that we saw at the end of 2019, continuing into 2020. And the biggest one right now, and the thing that I've been harping on a lot, is the excess liquidity that's in the markets. Towards the end of the year, towards the end of the month, towards the end of the quarter of 2019, the Fed was really concerned about the repo market. We talked about that many times. And one of the things that they did was flush cash into the repo market. They did so by buying bonds, taking that cash, and also pushing money into the repo markets, essentially adding an average of $100 billion per month into their balance sheet, swelling it by about $400 billion in the last 3 months of the year, more than was done on a monthly basis average during the height of the financial crisis. And you wonder why markets continue to levitate into the end of the year. That's the biggest reason. The reason of, well, valuations were low, that wasn't the reason. It was really all about the Fed pushing in and priming the markets with liquidity. Now the question is, they're going to have to eventually reverse that. We got past the end of the year, and the question they had about whether or not banks would have enough money in the overnight lending markets to make sure that they had excess amounts to satisfy all the things that were going to happen, whether it were the tax payments, whether it were overnight loans requirement, whether treasury purchases that were going to roll. They got past that. Now the big question is, what are they going to do from here? They said they're pretty much on hold through 2020 with rates. They may have to, in fact, roll back some of those repo purchases through reverse repo purchases or reverse repo operations. And then the liquidity starts getting drained. And then we enter into the next earnings season, which already we've known that most analysts have been dropping their levels, looking at a 4% decline this year on a year-over-year basis on earnings. Yet we've seen that PEs have grown to 18.5 from 13.5 where we were at the start of last year. So this PE expansion or a valuation expansion, multiple expansion that has gone on over the last several months really has to be reckoned with. But yes, we are seeing that not only the United States Fed central bank is priming markets, but around the world we're seeing negative rates continue in Japan, in Europe. We're seeing pretty much every central bank around the world cutting rates. The latest one, we saw one from Mexico last week. The latest one was Monday on the second day, the first day of the markets, that China reduced their reserve ratio requirements by 50 basis points, the triple R's. What that does is it allows for banks to provide more loans out there. They don't have to hold as much on the books, and therefore what it is a signal by the central bank, the Bank of China, to the PBOC, to actually allow for more money out. And what that does is it kind of flushes money into the system, again, creating liquidity. We saw that Chinese stocks were just glorious yesterday. Pretty much down the list of any Chinese-related stock did very well. One of the things that really was a concern that I saw, that's something that I was kind of thinking about was, it seems like a lot of the issues at the end of the year, we had so many headwinds, right? We had issues of Brexit. We had issues of the impeachment. We had issues of the trade war, a couple of others in there. Most of those were resolved at the end of the year. So what's to worry about? Well, now we see the CNN, this is as of yesterday, last night, the CNN Fear Greed Index hit 97, an extreme level of greed, something we haven't seen in some time. Go back a year ago, we were at a 12, extreme fear. That's when markets bottomed, based out, and started rising up. Oftentimes when we see these levels of extreme greed, markets are getting a bit frothy here. Because why? Well, what we're seeing is this wall of worry is crumbling. Markets oftentimes need an excuse to be worried about something. It's just the way it is. Markets like to worry about what's going on and kind of, think that, well, that will be resolved, and when we get past that, it will be good. And all of a sudden, we have pretty much nothing to worry about. All these things have resolved at the end of the year, and now all of a sudden, hey, great, let's just buy in. Oftentimes, that's an area of concern. Why? Because you have something that out of the blue, like, for example, the elimination of an Iranian general overnight by the U.S., sparking major retaliation potentially from Iran in one way or another, even though they're not as big as our country, even though they're not going to be able to probably do anything on American soil. But the fact of the matter is create some shockwaves. That's why oil is up 3.5% today, and the futures on stocks are down, because now all of a sudden we have something new to worry about, which could be something good, but it was a shock. That is the biggest concern. Not a big deal, pretty much taking back just the returns that we had from yesterday. So we're still even for the year here. But what we have now is something, again, to be worried about going into next quarter's earnings. It's a short market for weeks. We saw that, of course, markets were closed. I'm considering this entire week a holiday week. The real trading will start next Monday, even though we're seeing some downside here. And you have to also question one thing, and I think it's really important to question this. And that is, who's going to be holding futures or positions or longs that they just put on for a trading position over the weekend? I would venture to say that probably we'll see a little bit of a lift into the open. We'll see some resistance levels hit and then probably back off towards the close. into the fact that, we don't know what uncertainty lies over the weekend. But moving the markets this week, we had New Year's enthusiasm. We had the idea of, hey, I missed out last year, and I'm going to make sure to get in on it this year. That's why I think we're going to see some money pouring in, and why we did so far at the beginning of this week. And of course, an annual rotation that goes on. We know that oftentimes when a particular sector moves up, what we see from a basic, just a mechanical basis, we see that there is a rotation on the those that have really outperformed into some that have underperformed. So you have to look at things like the growth into value, maybe domestic into foreign. We saw that at the end of last quarter in particular, where emerging markets really outperformed, double the return of the S&P 500. In the final month of the year, emerging markets tripled the returns of the S&P 500. So we are seeing the start of a rotation, possibly an early rotation into this. And as the US dollar starts to come in, you may see some additional move into foreign markets or out of domestic that have a much less of a value proposition than you see in the foreign markets. So let's talk about some quick New Year's trading resolutions. Then we're going to get into stocks and discuss some markets, some futures, etc. Some New Year's resolutions I want you to consider. Think about this from your trading standpoint. Number one, cut your losses and let your winners run. This is something you've probably heard before, but oftentimes a lot of people end up cutting their winners and letting their losses run. Is that you? Have you done that before? I mean, that's something that a lot of people do. Let's not make that mistake this year. Keep that, maybe print that, put it on a sticky note, stick it on your screen somewhere, put it on your refrigerator magnet, do something with that, but let your winners run and cut your losers. At what levels? Well, find right below levels of support like we see on the TriggerCharts Commander series, where we simply draw these very important and high probability lines and give you levels that you can look at as support and areas to, leave that position. Don't be afraid to re-enter a position that maybe you lost on or didn't do so well on a confirmed signal. This is really important because a lot of people, they're like, I get burned in that name. I don't like that name. Well, that thing I didn't do so well on last time, I'm not going near it again. And what happens is, even though they see it as a really good entry point, they say, I'm not involved. And it runs away from you. You've had that happen to you, right? I'm sure of it. Well, this year, let's not let that happen. Where we see a confirmed trade, don't worry about particularly what the stock is, what it did the last time you entered into it and maybe didn't do so well or get stopped out right at your entry. Let's look at this as every entry position, if it's a good signal, if it's confirmed. If you have confirmation across the board on multiple time frames, let's get into that position, whether it's short or long. Don't worry about the past. Let history be history. Push it away and make sure that you get in on that trade. The other thing I think is really important that goes right along with what we're talking about with letting your winners run, letting your losers go, or cutting your losses, is have a game plan and stick to it. I think it's really important that at this time of year, spend a few minutes thinking about, okay, what's my game plan? What's my time frame that I'm going to rely on the most? What's the risk that I'm going to lay out there that I'm most comfortable with that's not going to spook me out and worry that if it moves down a point, well, I'm going to get out even though it doesn't hit my support point. And then all you know is you're out, and the next thing you know, it runs up away from you. Have a game plan, stick to it. And one of the things you could do to really ensure that, well, this is going to work is write it down. Commit it to paper. Now, whether you want to use a pen, whether you want to use your phone, whether you want to use your computer, put it down on paper and then print it. Keep it in front of you all the time. Know what your game plan is. Because you know what? No one ever really necessarily fails if they have a decent plan. But I got to tell you something. If you don't have a plan, you're planning for failure. We know that, and that's the case. You need a roadmap. You need something that can direct you at all times and keep you squarely in on either your trade or on your game plan. So make sure to put that together. The other thing is enter and exit on high confidence levels. Make sure that your trading has high confidence levels of entry and exit points in terms of the overall risk return reward setups as well as support and resistance. Don't just take a trade just to say, well, I'm going to take this trade just to see what happens. If you have confidence in it and commitment in it, then you can enter the trade. I think that's really smart. All right, moving along. Next week in terms of economics, not much going on this week. We have the Fed minutes at 2 o'clock today, kind of a weird Friday afternoon thing. We see factory orders next week, ADP employment, and of course the all-important BLS employment numbers, as well as wholesale inventories are coming out. I mentioned the 4-hour online coaching program. We're going to talk about Apple, AMD, JD. We'll talk about the SPOOs, which are now down 270. The Dow Jones down 270. SPOOs is down 33, and the NASDAQ Qs are down 107, working into the close. We see that, again, gold is picking up steam, up $20 at 1550, important level. If you look to the right here, when we are looking at this area of the daily crude, we've seen these spikes before, these dramatic spikes on action in the Mideast, and then it just kind of rolls back down when we realize that, you know what, well, there's really a glut of inventory out there. There's a lot of pumping, a lot of fracking going on. The U.S. is really dominating the positioning in overall production for oil, and there's plenty of it out there, and some of the Middle East tensions that have been, well, not that big of a deal. But I want to show you something. We go back and we see this square that I drew here this morning. This is an area of interest that really we haven't been able to, we peaked out a little bit in April, but we really haven't been able to get through almost a triple top formation right now. Right now trading at 63.39, somewhere right in the level of where we saw that spike in the late summertime period, and then that drop off. But you can see each of these spikes, especially those vertical moves, last for a few days, but then turn around. We did call a long position alert. You see the yellow that is starting to form here. Got right to the top of that level. When we look back and we find a little bit of an island right here and some support or resistance where we see the Commander Series, the altimeter, start to draw a line historically, and that's an important level that I think will be playing out. Couldn't get really above it for some time, and then it dropped off. I would think that, you know, depending on how things work, this resolution will be probably, I would expect it to get back to about 60, I would say right about here, 61, 62 level. We'll see how this plays. Remember that number, 63.38. All right, we're going to be talking about all this. We're going to talk about FXI, space, and Tesla. So let's kind of go with, why don't we start with, let's start with the ES. How about that? So the ES, we're going to look at this on a 30-minute chart right now because it's live and ticking. We saw that we bottomed out right about 6 o'clock in the morning. Let me get a little, what am I going to do here? Let's get a, all right, let's get a stamp out. We bottomed out here about 6 a.m. in the morning. Started coming down. This was obviously a major move lower on the news. We see there's a big fat pile right here at the about the 32.28 level, which is kind of right about where we are. Down to support where we see this yellow line. This is the radar part of the Commander Series. What you're looking at right now is the entire Commander Series package with the addition of altimeter. Altimeter's down here. Excuse me, aileron, pardon me. Aileron. Aileron is a momentum indicator that really gives you a double advantage. So we use the Commander Series with the radar, with the altimeter, with the radar screen up here in our autopilot, and then you see that we have the aileron. If you haven't noticed, we use a lot of airplane names of instrumentation on our indicator packages because we like to think about looking at this from 20,000 feet and having a clear view using our instruments to give us all the information that we need and confidence in a trade. So now we look at this and we see that we drop down here. We see the momentum shifted a little bit, starting to turn around a little bit right here. Got a little overbought on the aileron. Starting to come back up. I would say that you're going to see that possibly this level right here. And when we take, let's switch over to mouse mode. And let's take a tool. What tool do I want? I want my line tool, which is right here. And I want to say right about there. And we can connect a few lines. You know, below this level, about 32.25, you start seeing there's some holes area back down to right about 32.19. That's where we start to get that swoop down. You'll notice there's not a lot of volume, a little bit of a tick right there. Tried to hold and swooped lower, got back up. I would think that we're going to see a back and forth between these ranges today, probably the top end of 32.34, right about there. You can connect a few lines, you see where we stopped. Probably move in this range. I would say, let's draw this box today of somewhere in here. That'll be the most part of your day. You'll play within that zone. You'll probably be some drops down. Looks like there's some support moving to 32.14. But yet we've seen this run on the daily chart here. If you look on the right-hand side, this run has been pretty magnanimous on the SPOOs. And when you look at that, when you really think about where we are right now, it looks like we are a bit on the overbought side of things. However, the aileron on a daily basis is showing us a pretty good level of continued support, momentum, and upside trend. That's really what we're seeing when we look at the aileron, is the trend, the momentum the strength of it. We get a little overbought. Sometimes we tick down a little bit on that. But right now we're still seeing green. Until we really see that this kind of comes down to the zero line and below, the momentum still favors the upside of the market. This is a shocking event that is going on today inside of a longer-term trend to the upside. So when you look at this, you may not want to be necessarily totally bullish, especially because of all the froth that was built up in the end of December through the first day of January. But you may want to consider the fact that there is some support, and let's kind of spread that out a little bit. And that support is right about there. It's about 32.06 on that. So, you know, I think now let's see actually, let's see where we based out this morning. Right at, what was that level? Wouldn't you know it? About 32.07. That's what we came down to this morning. You kind of zoom right in. Came right down to that level, right about here, right? Actually, 3,200 is the core support. Sorry about that. But so you're pretty close to that. And I think that you have some decent support at those levels. Clearly below that, there's a hole. There's nothing in this range right here, down to about 31.62 again. So something you have to watch for and consider. That's on the ES, kind of hanging in the same ranges throughout the morning. All right, let's look at Apple here. I mean, really, what are we looking at here? Just a straight line up. You could draw a trend line if you want. That's going to take you right to the top. You know, just simply, I mean, it's not very difficult to just draw this trend line, right? Just you know, from both sides of this here. Got this channel that has been doing very well, and you're staying right within it. Now, you did pop over that channel a little bit. I didn't draw this perfectly. I probably could have drawn that a little bit more refined on the channel, but basically you did pop over it yesterday on that move above $300, which is a key psychological point. Right now trading at 297 this morning, down about $3. That's going to drag the Dow down pretty much. $3, about 25 points, not much on the Dow, 7 points for every point of any stock on the Dow Jones Industrial Average. So about 25 points to 28 points. 7.5 actually. So it's 25 points, let's say, on the Dow. And what do you have here? You have just complete air. I mean, look at this. There's just nothing at all here, down to about 268. So when you look at this area here and you look at this box we'll draw, if you will, that you look at this area, that's an area of concern, an area that you have to look at like, well, where are we going to go? What do you have to work with? There's not much to work with. I mean, if you want, what you could do here is we could turn on our radar, and you can see, I'm going to clear all our drawings too, and you can see that even with the radar, and we'll take our box tool and just draw that around here, I mean, there's just not much support back down at 280. So you got about a 20-point range on this that you really could see some significant amount of moving down to. But then you got a nice bar here at about the 280, 281 range. Then you got another hole down to about 273, right back down to that 268 that we've talked about a second ago. AMD, parabolic move, not really getting hurt too much this morning, down about $1. I think this thing is a bit overdone right now. We've seen this time and time again, AMD and the semiconductors going parabolic in a really risk-on type environment, and then they back off significantly and then miserable. So I would say that if you're a holder of AMD, watch the position, take some profits at this point. If you had this nice run-up, we saw a call of a long, just most recently at 41 and change. You're at 49. That's an $8 move. You know, it's about 18% on your money ever since, when was this? The 12th of December. Pretty good move. I would say that taking some profits off this, booking some of the profits now, wouldn't be the worst idea in the world. JD.com broke out. This is a Chinese name. I told you many of the Chinese names moved very nicely yesterday, trading down about $2.86, 2.5%. That's not what I want. PDD. PDD started breaking out also, down about $2 to 2% today, 2.5%. We got right up to the point of resistance. Looks like it was going to break out, and then it kind of is going to come back a little bit today. But you do see the opportunity for these Chinese names to really do some good. FXI, well, this is the Hong Kong index, right? The Greater China Hong Kong index broke out very nicely. Look at this beautiful run that we've seen here, right? Inside of a major consolidation. You always want to zoom out. You want to look from right to left. I mean, you got this huge consolidation going on. Let's not even talk about this downward action right here that we saw in the summer. But Hong Kong, interestingly enough, with all the problems that we're having, seemingly starting to really rally dramatically, thinking that maybe we're at the tail end of all the risk that we're seeing in Hong Kong. Down about 1.85% today on the pre-market. But we are seeing that the aileron starting to see a divergence on the downside here. If you see this right here, moving a bit lower. And that probably is something to look at. I would see that your major support down about at $43, about $1.80 below where we are now. SPCE, this is kind of an interesting stock that I've been looking at forever and ever and ever. It was at $10. I mean, you go back, look at this. It's like forever. You know, it kind of was $10 forever and ever. Then it took this major move down to $7.50. This is Virgin Galactic. This is the idea that, hey, we're going to possibly go to space one day and we're going to do it for fun. And Richard Branson's involved in this, by the way, and the Virgin name is on it. Well, kind of cool. So we saw this major move down. Then all of a sudden, this rebound up kind of got towards that level yesterday, broke out a little bit. If we see this above 1185, this could really see some skyrocketing returns. Tesla came out this morning that they were down most of the morning today, now up about $10 as they have come out with a report that they beat the quarterly deliveries for the fourth quarter of the year by a pretty wide margin. Who knows if some of those went out to employees and there were freebies and whatever, because we know how they operate there at Tesla. But there's been a lot of opportunity and people playing the game of, hey, you know what? Tesla's going to take over the world, even though we can't really look at their fundamentals in any way. But from a charting standpoint, let's look at this as a great lesson, because if in fact you say, well, I can't buy Tesla, man, you got Elon Musk, he's smoking pot on the Joe Rogan show, and you got all this going on with the questionable accounting issues with regards to how they do things and his obnoxious nature and all this. Okay, great. Put that aside. When we talked about new year, new game plan, let's just really focus on something here. And what we're going to focus on right now is right there. At 340, we got a very clean yellow barred alert. We saw that on the bottom, things were changing, momentum was changing. And what did we get? Well, from there, what we got was a wonderful move, and all of a sudden, everybody started falling in love with this again. And we got this great move on Tesla to the upside from 340, now trading at 441, all-time high again. And even though I think this is overdone, overvalued from a fundamental standpoint, we got out of it when it started dipping at the 420 level. So basically, you got an 80-point move on Tesla in a very short period of time. Right now, due to breakout once again, this is a little bit of a different breakout. The setup that I liked right here, and what I saw right here that I really thought was interesting, was that you had this longer-term consolidation. And from there, what we had was this breakout above the level that started rising. Right now, we have a pretty wide area comparatively to where we saw all these other areas, and that would be a lot more risk involved in this breakout. A lot of this we talk about in the tutorials that we put on over on TriggerCharts.com, which of course, this will be recorded today. Let's quickly get to a couple of stocks that you had before the bell rings. And also mention here, I'm going to put this in here. If you want to get a free trial, anybody, you just click on that. You get a 10-day free trial of any of the Trigger Charts indicators. But we have GM. I mean, we just looked at Tesla. GM, if you notice, we drew this some time ago, that GM is having some trouble getting through this zone, and nothing has changed. We're seeing that there is a bit of a breakout here, but yet we have resistance across the board and inside this major consolidation from about 40 to 36 or so. Momentum has changed very nicely on the aileron. This is very good to see. But yet we have a little bit of work to do to get through of all these levels. And we tagged this that you had to get above the 38 level. It's not there yet. It's not even close. It's not even trying. So people are not like willing to go near the old-fashioned car companies. Qualcomm, we got that. Qualcomm's in a bit of a consolidation mode, kind of above the level. We got in at about 85 according to the Trigger Charts altimeter and autopilot, and right now it's starting to move into sideways action right now. So I think that there is a slight level of, there's a lift on the aileron, but I'm seeing a little bit of a slowdown on this. I would like to see this a little bit higher, like we saw in this range here, where we saw bright, dark green, not these yellow bars that are on here. So Qualcomm doesn't look like a really great play right now. I think there's going to be some question as to if they can maintain the levels they've had from that big jump that we saw back in April. We're going to end it right there. I want to thank everybody for joining me, and make sure you go over to TriggerCharts.com. Yeah, there goes the market. It's open, and we're seeing a little bit of a knee-jerk kick down right now on the futures like we thought we would see coming into the open. Probably going to take a few minutes for this to resolve as the buy orders come or sell orders come in. Then we'll see some flush in buy orders. Everybody's thinking, oh my God, markets, look at that. We have to get in. So anyway, I want to thank you all for joining us, and we will see you again next week.